Spotlight on Aadhar Housing Finance then, and to talk more on the company's outlook, we have been joined by Rishi Anand, who is the MD and CEO of the company. Hi Rishi, good to have you on ET now. First up, what we understand that there are several initiatives that have been announced in the budget, like mortgage guarantee fund for the economically weaker sections and lower income group segments, along with that special window for completion of construction of affordable and income housing. How will this benefit the affordable housing segment? Give us a bigger picture there, and what will be the impact of the latest rate cut?
Good morning, Srishti. Thank you for having me. Yes, I think you've picked the first topic right. The budget announcements. Prior to budget, as you mentioned, the mortgage guarantee fund, which was announced prior to budget, especially targeting the EWS LIG segment. I think that's going to give a little upside for consumers who generally get left out in the normal course of business. So they are going to be now benefiting out of it, which will enhance the market size. So that's a great move that the central government has taken up. You spoke about the fund for construction of stalled projects, which is the SWAMIH 2.0, 15,000 crores. That is definitely going to give an impetus on affordable housing projects, because the reports that we've read in the last 6 months, the affordable housing projects, the supply side has gone down. I think this is going to push the supply side. More importantly, prior to the budget and in the previous budget, the announcement of the interest subsidy scheme, I think that is the big one that is going to give a huge push to the entire affordable housing segment, to the tune of 1.8 lakhs of subsidy being passed on to the EWS LIG segment. And if I can touch the last which is the tax benefit that has come in to consumers up to 12 lakhs of income. Now that is specially targeting, again, I would say EWS, LIG, and a part of MIG, as we would call it, MIG1. I think a combination of all of them, Srishti, is going to give a definite push to the housing loan, as well as the concept of buying houses.
We've seen what could be called as a price war in the HFC space. There is this
Sorry,
bank,
morning.
HFCs.
I didn't get that. Sorry.
How are you? Good morning. Nice to have you back. My question is that in the HFC space, which is the home finance space, we've almost seen what could be called as a price war. The world is worried about tariff war, but for HFC companies, it is price war in terms of rates. Banks wanted to lend a lot in the housing segment because that was good for them. Do you see that changing? Because of that changing, then pricing power automatically moves back to, let's say, for companies like yours.
All right, so let me take a minute here, Nikunj, to let you know, to make you understand how the housing space is entirely divided. It is divided into four broad segments, if I were to use that word. One is loans from 1 lakh going up to 35 lakhs, which is termed as affordable housing. Then there is LMI housing, which is lower middle income group, where companies in the ticket size of 25 to 30 lakhs operate. And then you have premium housing, where ticket size of upward of 50 lakh rupees companies operate. Now, within the affordable, with passage of time, I think two separate niche have been created. One is affordable, where again ticket size is 22 lakhs, and then there is this low income housing, which is average ticket size below 15 lakhs. That's where companies like us operate. I think all the companies have created their own niche. Everybody has their own pricing power. Everybody has identified their own set of consumers. There is a definite overlap of, I would say, 5-7% here and there, but that overlap of 5-7% is not pushing the companies against each other's in the price war, as you mentioned. So if I were to look at as is today, there is no price war happening. We are catering to, for example, the lowest possible consumer in the society. We have our own risk appetite. Based on risk appetite, we have our own returns. We will operate in the spreads of 5.8, 5.9%. We would want to continue there, and we are not seeing large companies and coming and creating a traction on that side. And so have, I would say, other segments are operating within their own niche, and they have their own pricing power. So as we see it today, there have been all these 97, 98 housing finance companies, plus banks, plus NBFCs operating in the space, but nobody has been ever, we've never entered into a price war game.
Has liquidity eased enough for HFCs, or are you still dependent on market stroke borrowing from the capital markets?
Sorry, I lost your voice.
Something's wrong with the mic today, I guess.
Okay, I'll fix it.
This is better. Yeah.
Okay, good. For there has been a liquidity crunch. Banks have not been lending to HFCs, and HFCs have been borrowing either from the capital market or via P investors. Has the liquidity now become easy, or would you still be relying a lot on capital market stroke P liquidity to fuel your growth?
So, Nikunj, the way it has happened, and it is by design. If I were to look at my borrowing, spread or pie chart 2 years back, we were like 68, 69% from the banks. We were very negligible from the regulator, which is also a big refinance partner in the housing space, and from NCDs. But if I look at it today, we by design we have brought the banks down to about 50%. 25% of my borrowing comes from National Housing Bank. 25% of my borrowing comes from the market and NCDs and T-bills. Would we want to continue this trajectory? I would say yes. As we go ahead, today we are a double A CARE and ICRA rated company, and we are anticipating a rating up notch happening anytime soon. The moment that happens, which will open few more doors, like the insurance capability of the insurance companies coming and investing in us. We are exploring ECBs, so there are multiple opportunities that we are looking at. If I were to answer your question in one word, are we facing any issues in terms of liquidities, even from the banks? As a matter of fact, we are not.
Rishi, what's your observation when it comes to the MFI space? And I know you have a very minuscule exposure, but just from your observation on ground, would you sense that there could be more NPA pressure, or do you think the pain is close to bottoming out when it comes to MFIs?
Aisha, if I were to use the word, the pain is looking as bottoming out. Having said that, we on a monthly basis are closely monitoring what is happening in the MFI space. And you're right, we have only out of the 300,000 live customers that I have, only 9,000 customers have an exposure to individual MFI loans, and close to about 700 customers would be in various buckets and bounce, etc. So for me, it is not a cause of worry because I'm a secured loan, etc. But if this trajectory of MFI continues for, let's say, 3-4 more quarters, then that's a cause of worry. Having said that, whatever little interaction that I'm having with the MFI companies, with the regulator, etc., we see it bottoming out now. So I think the cause of worry because of MFI should go off very soon.
If you like this video, then like, share and subscribe to ET Now.